Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A counter-to-the-counter bullish harami yesterday as the market dropped down to the combination of the lower time, currently 106.69, of the late November 2022 to early January bullish shift pitchfork, which is highlighted in dark blue on my daily chart, and the rising short-medium moving average, currently 106.69. However, the market did not like being down there and reverted back up to the next resistance, the April 2020 low at 107.25, which capped the day and saw prices close just under it. This had been the first real test of the lower time, though last week saw a test of the short-medium moving average. So far this has held, but by the middle of next week the short-medium moving average and the lower time will be pushing up over the April 2020 low. So I'm wondering how good it will continue to be. The next resistance above is the May 2020 low at 107.66, whilst the next support is the 2020 low overall at 106.35. So far today, well, a small push up over the April 2020 low and towards the May 2020 low. Cable, aka sterling against the US dollar. An immediate countering key reversal up and bullish double yesterday, after the previous session's bearish double. The market pushed back up over the May 2020 low at 120.73 and up as far as the next resistance in the 21.50 area, before closing just under it. I suspect this resistance was reinforced by the flatlining short-medium moving average, which was just above at 120.86. Further up we have the June 2020 low at 122.48 and the 50% Fibonacci line of the June 2021 to September 2022 move at 123.26. Meanwhile below we have the flatlining long moving average, currently 119.39, and the rising medium moving average, currently 118.82. I continue to keep on my daily chart, for now, the two broken bullish pitchforks, the Andrews and the shift of the early November last year to early January move. The reason why is not that they may be repaired, but that they may have time crossovers in the middle of this week and late next week, and I want to see what happens. We have an interesting build-up of a late November last year to date possible double top Adam and Eve type. We're in the final construction of the second top, and it will be interesting to see what happens now on this construction, as last week and this, the market seems to be rejecting this final build. Now so far today, a small move up over the congestion at 121.5 and looking now at the short-medium moving average above right now. Euro sterling. An interesting key reversal down yesterday as the market once again punched down through the combination of the 50% Fibonacci line of the significant March 2020 to March 22 move at 88.51, as well as the lower time, which is highlighted in purple on my it's the lower time. It's highlighted in purple on my daily chart of the late November to mid-January bullish pitchfork, currently at 88.63. This time prices closed below the time. We next have some support at the lower time of the shallower bullish shift pitchfork with the same move as the Andrews. And that one you can see highlighted in bright red on my daily chart, and that's currently at 88.10, as well as the rising short-medium moving average, currently at 87.78. Now, I decided to highlight the crossovers of these two tines, the crossover of all the tines for the two bullish pitchforks. The reason is we have a crossover of the actual tines themselves. The first one is on the 3rd of March. The second is on the 7th of March. Now, they are highlighted in green circles on my daily chart. All this is in the shadow of December of last year's monthly key reversal up. Now, so far today, we've been capped by the 50% Fibonacci line and not willing yet to try lower than yesterday's low really, but we seem to be tentatively moving down at the moment towards the lower time of the shift pitchfork. US dollar against the Indian rupee. An indecisive spinning top yesterday with a long tongue on it and not much of a tail. Indeed, it was almost a shooting star pattern or even a gravestone doji. This was again the market moving up and fainting away much as it did last week upon approach to the overhead upper time, which is currently 82.89 and highlighted in dark green on my daily chart, of the October last year to early January bearish but very shallow bearish shift pitchfork. A little lower down we have the compact combined support of the rising short medium moving average, currently 82.17, and the rising medium moving average, currently 82.06. So far today, a limited move back up, but still within yesterday's range, exiting yesterday's range and approaching that upper time. US dollar against the Brazilian real. A second bearish black crow yesterday and a very decent follow-on to the previous session's bearish dark cloud cover pattern type. Prices punched down through and closed below both the flatlining short medium moving average, currently at 521.10, and the long moving average, currently 519.47. But interestingly, pulling up from testing the flatlining short moving average of all things, and that's currently at 514.62. Overall, the market is still within the broken but seemingly since repaired upper time, currently 525.42 of the July to late September 2022 bearish shift pitchfork, highlighted in dark blue on my daily chart. To be honest, there is a hell of a mess of resistances up at these levels that have eroded and capped the market continuously. These include, but are not exclusive to, the 50% Fibonacci line of the March 2021 to May 22 move at 522.76, which was yesterday's cap. The short moving average, short medium moving average, I've already mentioned. The 50% Fibonacci line of the May 2020 to April 22 move at 527.37, and finally, of course, the long moving average I've already mentioned as well. The well-bashed July to September 2022 bearish shift pitchfork is still the key pattern here, despite earlier onslaughts. Further down we have a relatively free zone, down to the interesting 38.2% Fibonacci line of the June 2019 to May 2020 move at 510.87. However, the last few times we have seen the market try down below this Fibonacci line, we've seen support emerge at 503.33, 501.80 and 500.73, so caution. Over all of this is the monthly key reversal down we saw in January. US dollar against the Mexican peso. A third bearish black crow yesterday, and an interesting one as well. It was a continuing follow-on lower to the middle of last week's combined key reversal down and bearish engulfing pattern. But importantly, it was a move down below, and interestingly a close below the following. The neckline, highlighted in bright green, of the January to May 2021 head and shoulders top, that's currently at 1865.28. The lower time, currently 1857.18 of the March to July 2022 bearish shift pitchfork, which is highlighted in dark blue on my daily chart, and interestingly below the broken upper time of the March to July 2022 bearish Andrews pitchfork. Indeed, it was the lowest close since February 2020. The only pattern the market managed to stay within was the late September to early December last year bearish shift pitchfork, which is highlighted in bright red on my daily chart. And in between the middle time above, currently at 1882.71, and the lower time below, currently 1832.82. Below, we now have the February 2020 low at 1851.71 and the late January's low of 1850 even. And so far today, well, a constricted and narrow market, mainly between the broken upper time below and the breached lower time above. None of this is easy to say.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final important bit.